So, how to frame daily bias with SMC? Now, the first thing, we are going to stay on 4 hours time frame. So your time frame, you don't need complex of many time frame to confuse you. 4 hours is your what? Is your time frame. Now, what are you looking out for? We are looking out for 3 steps. Just 3 steps to frame your bias, to record your bias. So 3 steps to frame your bias. Number one is direction. Okay, let me put it structure. Structure. 2, whether BOS, and then number 3, premium, and discounts. Premium and discounts. So these are the 3 things we want to watch. These are the 3 things we want to, you need. These are the 3 things you need as you are coming into the market every day, every week, or any time. So, and then number 1, we need to stay in 4-hour time frame. We want to look at, okay, a price, what is the direction of the price, for current direction of the price. With this, you don't even need other price action that happened in the past. You want to concentrate on current market price, current market structure. So by this, what I need, please always mark it out. Don't assume with your head. You can see anytime that I am marking my chart, I always mark everything. I would label it. Why do I do that? Labeling it will help me to know the phase I am at that particular time. So what I do when I want to start analysis, whether daily or weekly, I've got to 4 hours. What is the current market structure? So by this chart, I mark out where my break or structure, right? So how do I know that market has broken structure? That is another thing a lot of people is struggling with. It's very simple. All you need to do at the current market phase, you look at a low, a high, and a low. Then watch out for if that high, that last high, once that last high, you see price, break that high and close with a body candle. That is a break of structure. So that is what? A break of structure. Now I have a break of structure. So this is my bias for today now. My bias for today is that a USD share, for example, is bullish. So your bias for the day is that, is market bullish? Is market bearish? If you cannot identify the phase of market for that day or for that week, you will trade in the directions of losing money. So the first thing is, which is the direction for today? Are we bullish or are we bearish? Now, by marking out my break of structure now, I know that everything now is we are bullish. So 4 hours has confirmed by this break of structure that we are bullish. Whatever I want to do in the market is to look for a buy opportunity. Likewise, last week when I told us that when you see a daily candle close bullish today, tomorrow, assume that tomorrow the candle will start, the next day will start, that day will start a bullish continuation until it proves otherwise. I've done that. Now, today on is how to use SMC to frame your daily buyers, and which I've not done yet. So now that I've identified today buyers that we are bullish, now how do I now come in? Come here, pick your Fibo. Here, there's a Fibo here. You can see Fibo retracement. Pick it, right? Now, how do you plug? Because you are looking for a buy. Plug it from the swing low, drag it to the swing high. Now, I'll give you the setting. I will change the settings now. All you need. I come to the settings. So let me remove all this. I only need 0, 1. I need 0, 1, and 0.5. Right? That is all. Then let me give background. Okay. So this is all I need for my Fibo. This is called premium and discount. Premium and discount. If you are looking for a buy, once you plug your DC from swing low to swing high, from 0 points, from this 100 to 50 is called discount. So this is discount. Now, discount is for buy territory. This is where buyers are waiting. You don't sell from discount. You sell from premium. So if I'm looking for a sell, I can look for a sell at this premium time and trade it to discount. Whenever price drops to discount, we look for a buy. So first thing, what is my daily buyer for today? My bias is bullish. What am I looking for as a trader? I'm looking for a bullish opportunity. For price to come here, enter discount, then look for a buy to continue the bullish leg. So that is number 2. Number 1, we have seen structure. Our structure is bullish by giving us a break of structure, BOS. Number 3 is bringing your premium and discount. So bring your premium and discount. Every SMC trader, your Fibo should look like this. Premium and discount. I've shown you how we do it. So all you want to do, you don't buy, no matter how the market will look good. Let's say price come here and begin to buy. You don't buy it. That is where discipline now comes. That even if you like this guy coming here and he start buying, I will not join the trade. I can only look for a buy when price come to discount. So that is how to frame your daily buyers every day you come to the market. Now, when price come to discount, we are not going to talk that one here, maybe another lecture. There, we now begin to look at what we call institutional references. So in the next lecture, I will cover that one, right? Because as price drop to discount, am I just to go buy? direct, or am I just going to sell? So likewise, in a bearish market, the same thing happens. In a bearish market, so let's say these are bearish market, price give us a break of structure. So price has given us a break of structure to the downside. So as I'm come to the market, what the direction of the market for the day is bearish. That is my bias. My bias for the day is bearish on 4 hours. 4 hours is enough for you to know it's enough for you to know the directions of where you are trading on that day. So the next thing is to carry my Fibo. Since I'm looking for a sell opportunity from this swing high where price break structure from, I will drag it to swing low. Then what am I waiting for? From 100 to 50 is premium now because I'm looking for a sell. You can see now, so as price go to premium, that is where I will be looking for a sell. Now, with price just enter premium, I am selling because anything from 50 to 100 is premium. Anything from 100 to 50 here is discount. So how do I know where to sell? That is where we call some PDRA. And one of the powerful PDRA that you can look out, which is very important, is liquidity. Liquidity at this area, liquidity on this area. Because if you cannot identify the liquidity, you yourself will become liquidity. So let's go to the charts. Maybe the next lecture we'll talk about how we can use of liquidity and how we can get entry from premium, or how we can get entry from discount. So let's go to the chart now and look at something. So I am on 4 hours. Although sometimes the chart will not be straight like this. And that is where a lot of people will get confused. But don't be confused. So I will use about 3 or 4 charts to map out everything. Let me clean this chart. Now I have come to a plain chart. I am on 4 hours. Let's say this morning I open my chart, or now I'm coming to the market. I open USD share. So the first thing, which is my bias. Bias means which direction. What should I look out for? That's my bias in the market. So I don't need to come back and begin to look at all what price has done in the past. No. All I need is, first and foremost, I can detect whatever from this low to this high. That's what I need. So the first thing is, we have a low, we have a high. Price create a low and price create a high. Simple. 3 steps. 3 steps. A low, a high, a low, a high. So that we call A, B, C, D. Now, the next thing is to what? That swing high, that a price rally, a rally, base rally. So price rally to this swing high, so I have to mark it out. So that is the last high price created, current price created. This is the last high. Is higher than this. You know, this is not a high. So this is the last high that this leg created. Then price sell off, create this low. This is major low. Then what we have this high. So we can see now that very simple. All I did is mark out a break of structure. Now I mark out my break of structure. Where is this? Where is the low that caused this break of structure? I will no longer use this low. I will no longer use this low, right? You know the reason why I will not use that low? You know the reason why I will not use this low? Because this low, it caused this high, and this I call this low. This low that I call this high. So here is my protected low. This is the low, the last low that caused what? That high. I label it with what? External low. Now, this now become what? My external high. You can see how simplified this is like. Now, my bias now is from this low to this high. What are we doing? We are bullish. Why? Market break structure. So what I need to do is to bring my Fibo level and I plug it from swing high, from this row to swing high. All I need now is, I have already know my bias. My bias is bullish. So whatever I want to do is to look for a buy opportunity from anything from 50 below. So that would be where I'll be looking for a buy opportunity. That is it. So with this now, I cannot identify where is liquidity. Where, because what the big boy, the institutions, what they seek for, they need liquidity to move price, right? They need liquidity. So inside my discount, I need to identify a place of liquidity. And we can look at it in two places. But that will come the next lecture, if God willing. So you can see simple way of identifying my daily bias. I don't need to draw any line. You don't need to draw any trend line, any indicator. No. Make it simple as ABCD. With discipline and simplicity, you will make money. With this now, I am not doing anything. Before I want to buy, I will allow price to come to my discount. So if I'm looking for a sell, a counter trade for any reason, I know that I want to sell from where the price is now. If you give me maybe lower time frame, 15-minute change of character, I can look for a sell. Why? Because I know that the uptrend is the trend, the direction is uptrend. So looking for a price will not just go forever. Price will retrace back to discount where I want to look for a major buy. But can I trade? If I say a trade opportunity here, I can trade it. That is what is leading us to second chart or Euro USD that we currently buy. But the danger on a counter trade is that we don't know how far it will go. It can, now we have been buying this now. This thing, it can start rolling back because it's an uptrend. So let me clean this chart again. So I come into the chart now in the morning or in the afternoon, any time in your region. You can see this is a Nikkei chart. I can even bold this chart to make it let's put a full screen here. This is a Nikkei chart. With this now, the first thing is, where's my daily bias? What's price? Your price is coming down. Okay, for me to identify a high. So this is the swing high that price created. This is the last swing high for price created before this down. There I can see this low. That price has breaking structure from this low. So I'll mark this as what? As my BOS. Finish. You can see now that I don't have business with everything that happened in the past. Now, how I need to do is to measure this as my what? External high, which is the high. Then price break structure and move down. This place become what? External low. Right? So we have what? Our external low. The next thing to bring my Fibo, my premium and discount. Now, you can see now we are still what? In discounts. And because we are in a downtrend, we want to sell. So, meaning that there's room for this guy to see trade at least above this 50. He can use this other block before it starts crashing. Now, and that is why we are buying. Our software gave us a buy here. That's why we are buying it. Whatever buy we are buying with wisdom as counter trading. Now, the danger of counter trade is that we may expect price to come up here. Sometimes price will never do that. Price will just do what? It will use 30, the top we call 32% of feeble level. We just start selling off. With that, if you start selling here, I will not sell. I will not join the trade. It's against what? My trading rules. Only I want to sell when price come to what? Premium. If you stay with this discipline, you will not be losing money anyhow. Right. So now, this is my bias now for this trade, whether I come into this morning or now, is that my bias of the day is bearish. Now, but before I join this trade, I need price to come to premium and look for a sell opportunity in premium. That is example number 2. Example number 3 is this GBP NZD that we are now. Look at this. Let me clean this chart again. Now, this is an empty chart. Before this drive, how had market be? The first thing is the high, the last high that formed. This is the high. So that I stand what as my external high. Where is this low? The low that caught, there was a buy before this high formed. This is the buy that formed this high. Then what do we see? We see a sell-off that crashed this high. All I need to do is to mark out my break of structure. So now, because I have a break of structure to the downside, everything about this trade is still what? A downtrend. Now here we come up my external low. My external low. So whatever I want to do in this trade is to look for what? A sell opportunity. So having done that, I have done this about last week ago. Allow price to trade to premium. Now price is in premium, and I saw some opportunity that, okay, this guy is good to sell, and that's why I'm selling from premium around there. And my stop loss come above this high. Now, why do I need to put my stop loss here? Meaning that whatever that made price break this high, then this sell is become what? A invalid sell. Whatever that made price to break this high, that will become a change of character. So you see simplicity, how you frame your trading bias in a simple way without any complication. So that is the simple way. Practice this 3 steps. Practice what we have learned now, and you will see that you begin to understand charts in a different dimension. It's not a skyrocket. There's nothing. Make it simple. Make it simple, and you will see a good result. So I'm stopping here. Then maybe the next lesson will now dwell on entry. How, when we come to discount or premium, what and what we need to see before we look for entry. Although there are still more deeper things, but that one is meant for mentorship, for a deeper knowledge. But with this free explanation class, I think you are good to go. Right. So thank you. If you have any question, let's give room for question now. I'm here to still have about 10-30 minutes to answer any questions. So you can ask a question, raise your hand if you have any question.